Hey family, hopefully all is going well. It's me, Anthony Tirado, and in this video, I literally want to give you guys a quick update because man, week by week I'm getting so much value, so impressed with this platform, especially with the release of the pip and dip indicator within our organization here at the LITT TradeHouse with Tradera. Now, for those individuals who are just getting started, make sure you have tapped into our launch manual because this right here is obviously organized to not only help you tap into the markets within your first 14 days, but get you organized. Literally from day one, setting up your account, understanding the platforms we're using, whether if that's MetaTrader 4 to place your trades, or even TradingView when it comes to marking up your charts and now accessing that pip and dip indicator, right? So make sure, obviously, day by day, week by week, you guys have a notebook, you're progressing, and definitely maximizing with what this platform has to offer. So for those individuals who are just obviously getting started, as you tap in day 1, day 2, day 3, day 4, day 5, day 6, day 7, you're definitely going to learn a lot of amazing content. Now what you're going to notice is this is not all of the resources that we have in our education, but definitely a great start to lay the foundation, right? As we now begin our second week into our platform, into our learning, and obviously tapping into the foreign exchange markets. Now, with our second week, highly recommended, we need to obviously identify the currency pairs we're trading, and these are just some quick recommendations that I obviously would suggest. If you're trading the majors, you need to obviously understand these currency pairs have small spreads. Obviously, highly recommended because most of them are obviously paired with that US dollar, which helps when it comes to just seeing the currency pair not having as much volatility, but great places to get in and out of the market. Now, when you're looking at your majors, you're going to be trading it not only with the currency pair, that US dollar, during New York session, but also during the other sessions that may resonate with that pair. As you already know, the foreign exchange markets open 24 hours a day. We need to understand what session we're trading, whether if that's London, New York, Tokyo, Sydney, right? And what currency pairs move during that time. Now, when it comes to your miners, this is where it gets a little bit tricky, just because with these currency pairs, they're clearly paired up with two different currencies. Now, for example, with AUD CAD, you need to understand that AUD is going to be during that Sydney session and that CAD is going to be during that New York session, right? Or let's say, for example, we have the Euro JPY. The Euro may push it around during one session, but also the Yen, that JPY, will have an influence. So, we highly recommend, you don't go too crazy when it comes to the miners, but make sure you can check one or two to maximize with our strategies and trading. Now, when it comes to your metals and your indices, I'll be completely honest, trading now for a few years, I would highly make sure that you have a large, account when it comes to trading, $5,000, $10,000 when it comes to this category. The reason why is because there's a lot of volatility, and the lot sizes when it comes to the gains are not going to be the same in terms of a measurement, right? There's going to be so many thousands of pips that some of these pairs move that you need to understand as much as you can make a lot of money, you can lose a lot of money. So make sure you're practicing, implementing what you're learning on a demo account with the realistic amount of funds you're going to trade with. So once it's time to eventually trade with those real funds, you've already practiced and understand how that market moves. So when it comes to trading your currency, I completely understand everyone might not be available all day, every hour. So this is just a little chart that I've put together just so you guys can obviously assist when it comes to picking your currency pairs based off of the times that you're available to trade. Now, if you look on the left side, these are actually going to be the times. There's 24 hours in the day, right? And with the markets being 24 hours a day, it's obviously because during the different time periods of the day, these banks and these markets around the world are being opened and they're moving and they're fluctuating. We're going to be looking at trading the market, whether if it's on a fundamental level or obviously that technical level that we dive into and learn within our foundation. So no matter what time of the day you're trading, make sure you're trading the right currency pair. So right here with this chart, for example, this is just a reference guide. In no way, shape, or form, do you need to follow this. This just helps aid, especially for those people who are just getting started. Let's just look at all the different currency pairs you can trade. Obviously, that AUD, the CAD, the Swiss franc, the Euro, the GBP, the Yen, the NZD, the US dollar, right? So with that, you obviously know that you have your different sessions, whether if that's the New York session, your London session, your Tokyo, Sydney session, right? So make sure during the time of the day that you're trading the right currency pair that matches up with that time. So for example, during the New York session, you already know that's at 8 in the morning, right? If you look at 8 in the morning, these are Eastern time, we're going to be trading those US pairs, right? As well as some Canadian pairs, as well as some GBP pairs because it overlaps with that London session. So let's say when we're trading the Yen session, we might be trading Euro JPY or USD JPY. So make sure you're trading the right currency at the right time so it helps you obviously avoid consolidation, dead markets, and obviously you're going to notice with this chart, between the hours of 4 to 6 p.m. This is just my recommendation. I like to stay away from the markets. This is just the dead zone. You might see some manipulation in price, the spreads, so I just like to stay away from the charts. A little breather isn't bad at all. So for me, I might be tapping into the charts, let's say at 8 a.m. Obviously at 8 a.m. that's coming from London session moving into the New York session. So I'll be trading some of my CAD pairs, some of my Euros from London, some of my GBPs from London, and then of course my US pairs. So this right here is just a great tool that feel free to screenshot this because it helps you just see what currency pairs you should be trading at what times so you maximize with those pairs. Now moving along, you need to realize with our platform that we have in our launch manual that's been put together by our amazing leadership team, we need to make sure that we're committing, right? That we're holding ourselves accountable. And this not only is with our education that we have in our back office, but also the live sessions that we have available here with Tradera. Because you need to be aware that we actually have live sessions every single day, right? Let's begin on Sunday. Every Sunday to Thursday with Tradera, we obviously have Derek Huahapsan with our market analysis, literally applying the markets and providing us with those market analysis in our Telegram chats, right? So what you also need to realize is here at the LITT TradeHouse, with the recent release of our pip and dip indicator, we also are doing pip and dip live trading sessions. So if you notice this right here, if you haven't done so already, each week there's literally going to be a webinar that you can register for all of the different sessions. Don't just register for one session, register for all of them so you can access all of these live sessions that we have here with our LITT TradeHouse community. You're literally going to notice here at the LITT TradeHouse we have a great organization of leadership and educators who are here to help maximize and help one another when it comes to analyzing and tapping into the markets. So with our live trading sessions, definitely try to commit 2 to 3 live sessions per week, no matter if it's during London session, New York session, Asian session. There's still going to be an educator there helping you guys, not only educating you guys in the markets, but also giving you guys market analysis, trade setups so we can tap into during these live pip and dip trading sessions. So now that we've been able to identify which currency pairs we're going to trade, some live sessions we need to trade, one thing that we want to make sure that you guys understand is you need to get registered into the 20 pip and dip strategy, right? And not only the strategy, but now the indicator. So make sure you guys take notes, make sure you have that notebook because this is something very simple. When you go to the launch manual and you click on this link, which is right here, it's literally going to take you to the page where you're going to set up your registration. That's going to ask you, hey, what's your client ID for Tradera? What's your username for Tradera, right? And one thing you're going to notice is when you go into your Tradera back office, to find that information, all you have to do is go to the upper right-hand corner where your profile is, select on your profile, and it's literally going to take you to your page that gives you your client ID and your username. So no matter if you're trying to register for the 20 pip and dip page or if you're trying to register for the 20 pip and dip indicator, when it asks you for your Tradera username or your client ID, make sure this is where you're going to find it. Now, aside from that information, you're also going to be asked when it comes to getting the indicator for your trading view information. Remember, this indicator is going to be accessible through TradingView, so you can use it on your mobile device. You can also use it on your laptops. So when you log into TradingView, you're going to select right here where your profile name is. A drop down is going to appear, and you're going to select on Profile Settings. When you select Profile Settings, it's literally going to identify your username that you're going to copy that bad boy and paste it into the registration. And I'll show you guys what I mean by that. So make sure, if you haven't done so already, that you know how to recognize and identify your Tradera information, your TradingView information, so it can make this process so much easier for you to get approved. So once you guys get approved, the first thing I want you guys to do is make sure to watch this video that's 23 minutes long and just follow the other directions that we have listed below. One thing you're going to notice is the main strategy page and the masterclass are actually the same page, right? So make sure you watch this 23-minute video that's going to break down the strategy, but at the same time, if you need additional resources for the 20 pip and dip strategy or how to utilize the indicator itself, you come into our LITT TradeHouse Facebook group, and once you select on units, you'll scroll down, and under Unit 5, you'll find a lot of the trading sessions that we've been having. So under Unit 5, once you select it, there's literally going to be a bunch of different webinars where Coach Max breaks down the indicator, webinars where Coach Max goes into introduction of forex. You know, these are going to be some other places for you to find additional resources, information, and value to assist when it comes to your learning. So when you tap into the LITT TradeHouse Facebook group, make sure you tap into these units, because these are literally going to be places for you to find additional resources and information. So as I mentioned, inside Unit 5, you'll find more information in the pip and dip indicator and also the strategy that Coach Max, which obviously you see she has her webinars on, is going to be breaking down. So moving along with the 20 pip and dip website, once you've watched the two strategies, once you've taken your notes and obviously understand how to implement this piece, you're going to obviously want to tap into creating your own trading plan. So once you select trading plan, you're going to make sure to make a copy, right? So you select trading plan, it'll take you to a page like this. And this right here is where you're going to put together your 20 pip and dip trading plan that Coach Max discusses. Now one thing you're going to do is obviously select file, make a copy, okay. And once you do that, that's obviously going to allow you to access this page so you can literally put in your credentials. So let's say if you're starting an account with $500, you can place it there. You can identify the different type of setting that you want in terms of, hey, do I want to be conservative, moderate, aggressive in my trading, right? So that's going to be something that allows you to apply that to your trading style and your trading plan itself. So now that you've created a trading plan inside your 20 pip and dip website, we want to make sure that you guys can now access the 20 pip and dip indicator. So once you select on get the indicator, it's going to take you literally to this form that you need to fill out. Now if you remember, you now already know how to access your Tradera information as well as your TradingView information. So make sure you literally fill this information out and all the information is correct. Your name, your email, your usernames, your IDs, and at the same time, as it's required, make sure that you have an active client membership, right? So once that's all filled out, you'll literally put in that information and should be approved with your pip and dip indicator that's accessible through TradingView. So the next thing you need to do is literally go into TradingView, and now this right here is going to be where you can access the pip and dip indicator. What you're going to do is you're going to select on indicators. As long as you're approved, you're going to have access. So what you're going to do is you're going to type in 20 pip, and then it's obviously going to pop up 20 pips and dip. Now once you select on this indicator, if you have access, it's now going to appear. So now that I got your Forex brains working, I want you guys to remember, do not forget none of those components that we've learned about. support and resistance, zones, how the market moves, Japanese candlestick patterns, because it's all going to help with this indicator. So if you guys notice, with the recent release of our pip and dip indicator, there's actually a new update that I'm very happy about, which is actually the addition of these yellow candles. This is obviously going to represent our pivot levels. Now, one thing I want to do is I'm actually going to break down this entire indicator so you can customize it yourself. Because now that you have the indicator on your trading view, you're literally able to take it away from the markets, put it back on the markets, right? So now what happens is when you go into your markets, you can properly mark it up, identify your key levels, and then you can obviously identify your pip and dip indicator and have it on there. So the first thing I want to talk about when it comes to this pip and dip indicator is market direction. So the one thing I want you guys to identify with the 20 pip and dip indicator is literally the market identification. The great thing I love about this indicator is for those individuals who are just getting started, you're literally going to be able to have access to this feature that helps you identify the market conditions when it creates higher highs, lower lows, lower highs, right? So with this, no matter what time frame you're in, going from the daily, the 4-hour, the 15-minute, whatever time frame you're in, you're going to be able to now identify where the market is moving. So eventually, let's just say in this scenario right here, just imagine as this market is moving to the downside, you start to see that it creates those lower lows, it identifies it. Not only that, but it creates those lower highs, it identifies it. Lower lows, it identifies it. So this is a downtrend. So as that market pulls back and creates a lower high, you already know you're looking for what? Selling opportunity. Remember, not only are you just applying this indicator, but also applying everything you've been learning on the back end. What happens when a support is broken right here? It becomes resistant, right? So now just from this feature in itself, you're looking for selling opportunity. You see the market pulls back to that resistant area one more time, and then boom, that area is resistance to sell. So whether if you were able to catch that wick right there or even patient enough for this entry right there, you were already looking for selling market conditions to the downside. So the next feature I want you guys to be aware of is actually an attachment to our candlesticks. You notice it's actually going to help us identify when we're dealing in a bearish or a bullish market, right? In this scenario with my chart properties that I have, the bearish market is represented by our black, and then our bullish is represented by our blue. So you can see that when we're dealing in a bullish market, the candles are blue, and then clearly when we're dealing in a possible bearish market, the candles are black. So with this next feature, I want you guys to notice when you're looking to buy or when you're looking to sell, you also can confirm it with these candles, right? So when the market's obviously in that bearish momentum, you're looking for those sells. This market condition identifies the sells. The candles are there. So it's just a matter of time before that market retests this zone and pulls back to go even lower. So with the next addition to the pip and dip indicator, I want you guys to realize that we're going to be using that 50 moving average. Now Coach Max discusses it various times because it helps us identify our market condition when it comes to if we're looking for buys or sells, and at the same time those possible pullbacks where the market may be looking to retest. So in this scenario, as you already know, with this market that has already been identified, it's creating a downtrend. The moving average is over us, and clearly the candles are already bearish. So this would have been a great opportunity to look for sells, pushing it to the downside. Now, aside from that, you'll notice when we're dealing in a bullish market, what does the candles do? The candles change color and they turn blue, right? So the great thing is as you're starting to trade to the market, the upside, so now you're going to notice as you're starting to deal in a bullish market, what does the market start to do? It identifies the market, right? It goes higher, higher, high. It pulls back, higher, low. It goes higher. What is this? This is an uptrend. So even with this market, you notice the moving average is what? Under us. You notice right here the market pulled back to that moving average. Here, let me delete this so you guys can see. As you guys can see right here, this market pulled back to that moving average. What was once resistance that was broken and now is now support. So that gives you the opportunity to look for the push to the upside with this market. You see? And that was just simply off of identifying the trend, identifying the candlestick, identifying the moving average. The next addition that we're going to have in our 20 pip and dip indicator is obviously going to be some key support and key resistant levels. Now, if you notice, what do you know about resistance and what do you know about support? When the market is pushing us to the downside, it's known as resistance, right? Or as if the market is what? Pushing us to the upside, it serves as support. Now, if you also remember, what happens when support, like this scenario right here, support, what happens when support is broken? It becomes resistance. So that area is now what? Resistance. So you see now how it converted to red? Because now it turned into some resistance. Now, one thing I want you guys to notice with this indicator right here, it's not only going to help you identify some support, some resistance, and how the market is, but also the structure of price. This indicator is very important because it identifies the structure of price. Let me break that down to you. Just imagine if you're looking at this market, you want to identify where the market has been, those high points and those low points, and those key points that are effective, right? Because if you notice, let's actually zoom in right here. You notice that with the next addition, this right here is going to help you identify the structure of price. Not only if it's relevant to being support or resistance, right? But the structure if the market breaks that, right? So what you're going to notice is in this scenario, let's say we have the market conditions that's giving us a downtrend. Look what we have here. We have our moving average that's over us, that's giving us down pressure. We have our bearish that's there. It's going to be a matter of time before the market breaks to the downside. So what happens here? Support, support, support. Then the market breaks that support, pushes to the downside. You see how it broke that structure? That was that momentum, that break that you would have placed your stop loss, looked for the entry and took in at 20 pips, dip, and maybe even more. So with the next addition to the 20 pip and dips indicator, I want you guys to understand that this is going to help you when it comes to your structure levels, right? Seeing potential places where the market could pull back to, but also seeing those breaks in the market. So for example, if you see this market, what conditions do you see? You see that it's creating lower lows, lower highs, lower lows, lower highs. This is a downtrend, right? So dealing in a downtrend, what is confirming that? We have our moving average 50 that's confirming that. We have our candles that are black that are confirming bearish pressure. And then we have our structure levels that no matter how the market moves, the structure is always going to be identified, right? So as the market's pushing to the downside, you notice that this right here, let me show you guys, this right here was a great opportunity for us to break to the downside. So now that we're able to identify this market, as the market's moving to the downside, you're going to notice it starts to break some key points. Break some key points and look for those key areas to pull back to. So as the market literally identifies that it's in a downtrend, right? And as that moving average is helping us push to the downside, you're also noticing that the candles are confirming that bearish pressure. So even right here, let me show you guys, once the market breaks that structure right there, you can see with the candlestick pressure to the downside, you could have definitely been looking to sell, right? And at the same time, where would you place your stop loss? You would place it above where the market hasn't been, right? Now, as this market continues, let's see what it does. It pulls back to that zone that gets broken right there. And not only that, it gives you another setup where you see that it hesitates. It creates consolidation, 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 then finally breaks again to the downside. Right there. So with this tool, not only are you able to now identify how the market's moving, but find the setup, find the structure that needs to get broken, identify the confirmation of the market that you're in, so when it does make that move to the downside, you know you would have been maximizing that move, right? Now remember, This right here is just giving you the overview of the indicator. When it comes to our entries and exits, different educators have different tactics. Of course, whether if they're entering off of the 30, the 15, or even the 5. But I just want to show you guys the elements of the 20 pip indicator and how you can apply it to what you already know and learned, right? So if you remember from the beginning with the pip and dip indicator, we have our labels that identify whether if the market is in an uptrend or downtrend or maybe even consolidating sideways market. We're gonna be able to identify not only that, but with the moving average, the type of market conditions we're looking to get into, whether if that's buying or selling. Now, with the market moving, it's going to help you now identify key levels, key structure points that you're looking for the market to either break to the upside or break to the downside. This obviously was a great example to the downside that the market broke, whether if it was right there or whether if it was right there or even whether if it was right there. All right? So let's just look for a quick example where the market did to the upside. So as you guys already know, what helps you identify the market pushing to the upside? You're going to need what? An uptrend. So as you're looking for the uptrend, that's the market is what? Finally breaking to the upside. As you're identifying an uptrend that the market's finally breaking to the upside, right? Look what it's doing. It's pulling back, especially to that 50, and it's going even higher. So as that's happening, some key things you can look for is not only those pullbacks, which are going to be nice, especially at areas where the market was once a resistance where it can pull back and become a support, but also you're going to look for those breaks of structure to the upside. You see right here that all of this structure that was once, guess what happened right there? The market broke it. Guess what happened right there? The market broke that structure, right? Let's see if we can identify any other opportunity where the market breaks that structure, where you can make that move to the upside, right? We're still dealing in what? An uptrend. As you can see right here, just based off of the market conditions that we have, what is the market doing? It's pushing to the upside, right? So as you're looking for the market to pull back, whether if it's pulling back to the 50, whether if it's pulling back to some zones, that's going to help you now identify opportunities to get in. So let's just say right here, let's just look at the pip and dip indicator currently. If you notice, we obviously were able to identify the market to the upside. It pulls back to our zone. It pulls back to retest that 50. So what happens right here? It breaks not only our trend line, pulls back, but boom, takes off to the upside. So once that market not only broke that structure again, once again, right there, you would have taken it to the upside, placing your stop loss under the price where the market hasn't been taking it to the upside, right? So listen family, these elements of the 20 pip indicator are crucial for you to understand because it's going to help you maximize as an independent trader. So the next element of the 20 pip and dip indicator I want you guys to notice is actually the addition of our pivot levels. Now, if you guys go through our intraday trading strategy, you notice that we do implement key pivot levels which help you identify where the market may reverse or potentially move to, right? So one thing I want you guys to understand is when you've implemented this into our 20 pip and dip strategy, this right here is going to be where you see those yellow candles. So let's go into our example that we had a market that's been trending to the downside. As the market's trending to the downside, these yellow candles that are being created are pivot points, key pivot points, right? So now that you've identified your pivot candles, which are obviously these yellow candles, it now helps you identify any potential turning points that the market has. So for example, if you guys remember, in this market that we had right here, we're dealing with a downtrend. The market's clearly what? Pulling, breaking lower, pulling back, breaking lower, pulling back, right? So once you've identified the market that you're in, obviously you notice that the market's tending to what? Pull back to some zones. It's pulling back to some zones. With the pivot's addition to our indicator, now it's going to help you identify, you already know the market conditions you're in. Now once you get the indication that the reversal can happen in your favor, which happened right here, at this candlestick right there, you see how it's yellow? Now you know what happens. Down, 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 down. So once it breaks the structure, which it did right there, it's just extra confirmation to take it down. So these pivot candles not only help you for essential areas where the market could potentially turn around, but also zones. Ready? You see how we have these pivot candles right there? You can literally grab those wicks real quick because these are going to be areas where the market's having hesitation, having a fuss about what it wants to do. So as we literally identify these zones, let's just identify the zones real quick. Boop, 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 boop. So once we identify these zones where these pivot candles are, look at how the market is reacting. Ready? Now that we knew that this was a nice maybe area where the market could react off of due to some pivots, guess what? We would have been looking for what? Reaction. And guess what it did? Reacted nicely to the upside. Not only that, but look at how the market reacts. It breaks, pulls back, continues. Right? It breaks. This might do a nice pullback. Guess what it did? It broke it, pulled back, and then continued. So just identify with your pivots, with everything that you have, it all comes into confluence in your trading. Now, when you're in an uptrend, how can you use the pivots addition to our advantage? Just look right here. With an uptrend, you already know the market's moving to the upside, right? So the market's creating these wicks where you can grab some zones. As the market is moving to the upside, it's breaking levels and pulling back, right? So just imagine, now that you've identified your uptrend, as the market's pulling back, whether if it's pulling back to the 50, pulling back to some zones that we have, look at the pivots candles that we do start to see, right? Now we already know that some of these areas the market's going to look for key pivot points, right? But just imagine, now that we are looking for an uptrend, now that we know that this area, the market's seeing some nice potential pivots, guess what it now is looking to do? Make a reaction. What was that reaction it was looking to do? To the upside. And that was something as simple as now, once you've identified those pivots and you still are applying everything you've learned in our education, you already know the market just simply did this. Identified the pivots, it broke the trend line, pulled back, and went higher. Where would be your entry? Look, you have multiple entries, especially at the structure break. But look, once it pulled back here, once it pulled back to the zone that we possibly have right there, all of that would have been a great opportunity to take it up. Now, as the market's going up, look what it's doing. It's breaking these zones and it's pulling back to some of those key pivot areas. So with that indication, now you already know this is possibly an area that the market's looking to what? Pull back and then do what? Continue going what? Higher. So obviously when it comes to our 20 pip and dip indicator, you're going to notice all of these key components are going to help us when it comes to maximizing and getting into the markets. Now just a few other indications that we do have when it comes to our 20 pip and dip indicator is clearly we have these indications that help us identify when to buy and sell the market. Now, if you guys are aware, remember, do not get lazy. Make sure you identify your levels and everything. But when we're dealing in a market that's a downtrend, what are we looking to do? Sell, right? So one of the key things we want to be able to do is find those key points, those key moments to look for sells. Now, clearly, if this right here is a little overwhelming because you see a lot of sells and a lot of buys, all you have to do is simply come over to your indicator and just turn off that setting. And now you'll see it clean up a little bit, right? Now, aside from this great feature, something else you're going to notice is I just recently added the open feature, the daily open feature. Now, what this allows you to notice is we actually have this cross right here, this dotted cross line that turns green and it turns red every time the market crosses it. So, for example, let's just go back here and let's look at that dotted line. Let's see where the cross is right here. This right here was where the market opened. If it went above it, it's obviously going to turn green. When the market broke below it, that dotted line turns red. So one thing I want you guys to realize is I completely understand that looking at this indicator can be a little bit overwhelming. Now that one thing I want you guys to understand is as you tap into this indicator, all you have to do is come over here to the settings feature, and right here you can literally update it, customize it to your own preference. So for example, with me, I know when to get in and out of the market, so I might not need the indications when to get in or out. Or for example, I already know how to identify a higher high or a higher low in the market, so I might not need those things, right? Or obviously the labels of when they're there. So now, for example, now that we have our pip and dip indicator, it's a little bit cleaner now when you have just the key elements or the key components that you want, right? So just imagine, what's the first thing you need to do when it comes to trading, right? Let's just look at this pair right here, New Zealand dollar. We need to go to our time frame. We need to go to our higher time frames. We need to identify our key levels when it comes to that hour. As you already know, once you identify your levels in the market, what's the next thing that you identified? You can go into your 30-minute, identify some quick zones. So literally, just from the zones we identified in the past, let's see how it affects the future. You could notice the market pulls to those zones, reacts off those zones. All we have to do to extend our zones are double click it and make sure that the number is a positive number, positive high number. So for example, what I'm doing is I'm just extending my zones so that past price action can help me identify any future opportunities, right? So one thing you're going to notice is obviously a lot of the educators trade different, have different styles, but the key thing you're going to notice a lot of them do is that no matter what type of markets they're in, they want to mark it up and understand it, right? And this is one of the key things I want to do right before I obviously apply my 20 pip and dip indicator, right? Now what you guys realized is I obviously did a few things. I edited it, I took off what I didn't want so it can look a little bit more cleaner. But just imagine now, let's just look at how the market has reacted with our indicator attached, right? Clearly in this market right here, we have this zone. Look at how the market broke the zone, pulled back, now it's going up, right? Or how the market reaches this zone, breaks to the downside. What happens when the moving average is over us? We're looking for sells. We want to confirm that with the candles being bearish, right? We want to confirm that with the structure that's getting broken, right? Now, if you're noticing with this markup, let's just notice, you see how the market broke that structure right there? We could have looked for sells. You see how the market broke that structure and that level? We would have looked for sells right there. You see how the market broke that structure and now that level? We would have looked for sells right there. All of those opportunities would have been great, especially off of the break of that structure, right? But at the same time, finding even better entries, such as pullbacks or retests to the 50, would have been even better. So just imagine, as the market broke this zone and this structure, what did it do? It pulled right back. Pulled right back to the 50, pulled right back. So if you would have had a pending order, you could have entered right there, placed your stop loss, you know, where the market has not been. And that's obviously in a downtrend. However, when the market's dealing in an uptrend, let's say this scenario right here, let's see what happens. If you notice, let's take our indicator off, it reached a level of support, 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 support. So once that happens, let's just see how the market reacts to our zones, right? Let's apply our indicator, and let's already confirm where would we have looked to get in. What did the market do? It reached all that support. It broke to the upside. It's now helping us identify possible uptrend, right? So once all of that gets broken, I already know what the next move this market is creating. I'm looking for pullback, right? Pullback, you see what it did? Pullback to go higher, right? I'm still looking for possible pullbacks to go higher. Remember, when you're in an uptrend, you're looking for the confirmations. When you're in a downtrend, you're looking for the confirmations. Now, since we were in an uptrend, that's why this market is what? It's moving up, it's moving up, it's moving up. Now, let's continue looking at this chart. As this market is, here, let's confirm. As this market is making its move, no matter what, we want to make sure we're identifying what it's doing so we know if it's going in an uptrend or in a downtrend. With this market right here, we would have already known what it's creating those highs, so it's looking to go up. It's also what? Creating those lows. Those low points are what? They're going up. So eventually it's just a matter of time as the market is pulling back that it's going to eventually break. Look what it did right here. Broke the trend line, retested, and goes up. Let's see where we could have possibly gotten an entry with our 20 pip and dip indicator. We literally grab that beast, and you notice right here, already identifying that. Just imagine, if this is the right session to trade NZD USD, what type of market are we looking to get in? We're looking to get in on a buy. The bullish pressure, right? Look at the candles, how they're looking. They're looking bullish for me. Look at, they're blue, bullish. You see the structure that gets broken right here? The market breaks that structure. Let me show you. Where does it break it? Right there. Boom! Once that happens, you're looking to place your stop loss under where the market hasn't been, right? So if our stop loss, if our entry is off of that, and our stop loss is right there, that's about a 35 pip stop loss, right? 35 pips. Where do we take our trade to? Well, we have our levels, of course, then we have our 20 pips, and then we can dip, right? So if we're going for 20 pips, we would have hit our 20 pips right there at that moment and got out of our trade. You notice the market pulls back, we possibly would have gotten in another trade right there, taking it up. But as this market is going up, look what it's doing. It's breaking the structure to the upside. So now with that confirmation, it allows you to get in for the buy, grab your pips, and dip, right? As you would have done here. Grab your 30 pips, as the market did, and dip, because it gave us all of those conditions for the buy. So hopefully this was just a little quick overview to help you understand a little bit. But once you have your 20 pip and dip indicator, make sure that you guys literally mark up your charts beforehand so you can just attach it. So like I said, if at any point you don't want any of these features to be on your pip and dip indicator, all you have to do is literally go back into your settings and unclick them, right? So if you already know how to identify your higher highs and your higher lows, you can unclick it, and now it literally clears up your pip and dip indicator, making it a lot more easier for you to trade and find potential setups. So hopefully this was a great video, to give you guys a little introduction about the pip and dip indicator, how it applies, how you should look for possible entries in the market. But if you have any questions, feel free to attend our live sessions that we have throughout the week. Ask questions, trade live with our educators, and let's maximize with this amazing tool. Take care, family.